Welcome back to my YouTube channel, traders. In today's video, I'm gonna through some price data here on the Euro USD 3-minute chart here, and I really want to show you how you can start to simplify to hunt your trades and prove that you don't need to overcomplicate things. Like, I want to keep things simple and I don't want to overcomplicate things. Like, I actually not looking at the high time frames so much. As I said in my earlier videos, I working a lot with intraday charts. I work a lot with like the low time frames. I work a lot with session highs and lows, and I don't spend so much time at the like high time frames, and high time frames for me is like daily, weekly, monthly. Those time frames actually not gonna help me so much, because in this intraday price action I'm gonna many times find exactly what I'm looking for. So I just wanna show you today how you can keep it simple and just don't overcomplicate it. So, gonna put a few lines here. And what we can see here, we obviously have the start of the day right here. And it doesn't really matter which session you're trading or when you're trading is on the day. Preferably you want to trade like when the kill zones is operating, but you can also, as you can see here, find setups between the kill zones and obviously in the end of the day, which actually is a kill zone, is still on the close. But if you're just focusing on the London session here and the New York morning run here, let's say you gonna operate during the London session. What I do, I start to look to the left. So let's say you're sitting down at a computer right when the kill zone starts here. We have a high in place here, we have a low in place here. So if I'm not at those extremes, like these old highs and lows, aka liquidity pools, I'm not super interested into trading these. But because remember what the model is telling us, you want to trade at old low or old highs. So price is breaking out on this old high back here, starting to consolidate, and we have a displacement lower to attack the session start here. So we have a little sell model completing here with a original consolidation. It leaves, takes out liquidity, and it targets the original consolidation here. This could be a potential area I could take a loss, because we have relative equal highs up here and we have been taking out liquidity here. Price is breaking out, it pulls back, creating a high here, and we have a displacement higher here. So we breaks a short-term high here after sell side is taken. So drawing a fib from this low to this high here could be a potential target for these highs here to complete this buy model here. But instead we have a short little shift here. I think if you jump down to the 2 minutes, you have a swing low here with its displacement lower. So yeah, it basically fails to take out these highs. Instead it's just drawing back up into a premium to continue lower. Anyway, let's say you couldn't trade during the London session. Let's say you came to the screen later during the day. So I want to be a seller or a buyer at the extremes. And of course, you can draw out a line here representing the London session low, and you can maybe scalp a little buy model in here, but I want to use this old low back here for the extreme, because this low is inside the daily range. And when price is breaking out on this old low here, breaks out, it pulls back, puts in a high, and trades right through it. So we have a bullish market structure shift. Here it can be a little bit tricky, because when price is trading above this high here, we have a small little buy model finishes here. So if you're not trading at the right extreme down here, maybe jumping down to the 1 minute or even second time frame, keep in mind that when you, for example, taking an entry of this fair value gap here, so the buy model completes here, so you can expect a short little retracement to maybe go higher. I would personally avoid these type of situations, because we have a new session starting here, like the New York morning run. So many times I'm waiting to see how the session starts to trade, and what you can see here in the beginning of the session, the price starts to consolidate right here. We have a price going back and forth, creating equal lows down here. So remember what I said in my previous videos: whenever price is leaving a too clean area of liquidity or consolidations, I immediately see that as a buy or a sell model. So this could be a potential start of a sell model. And if this is the original consolidation, I want to hunt the area where it could potentially make a reversal. So what I do next is I just look to the left for old highs if it's a sell model, or just old lows if it's a buy model. So if you're not sure which of these highs to the left here you want to use for your reversal, you can just, by drawing lines, you can just reading price and see what the price is doing. So what do we have here? We have price leaving a consolidation, it breaks out, it pulls back, putting in a low, so no shift yet. Instead it continues. Okay, look for the next liquidity. We have it here, old high here, breaks out, pulls back, puts in a low, and continue. So no shift here at all. Okay, we use the high of the day here in the London session high. Here we have a little bit of a different scenario. We have price breaking out, it pulls back, creating a low here and displacement lower. So we have a market structure shift after we took out the high of the day in form of London session high. We also know that in bearish price legs, bullish up close candles should support price from going higher. So this is a 2 minutes intermediate term high, also a up close candle here with a fair value gap. So high, low, fair value gap, up close candle, trades up into it and sells off into the original consolidation. I can show you my entry right here and my exit right below the original consolidation here. That's basically how I try to work inside the daily candle, and I hope this video was a little bit helpful, and I see you next time.